Hello and welcome to the Tax Roundup for September. Inside this month, we're going to take a look at the tax treatment of COVID-19 related assistance to business from both the state and the federal government. We'll also see what the ATO has said about the impending deadline for the superannuation guarantee amnesty. But first up, JobKeeper. The legislation extending JobKeeper is before the Senate, but we're yet also to see the rules that sit behind those changes. Across to Michael for the latest.
Probably one of the big items at the moment in the tax world is what's happening with JobKeeper. And to some extent, we know what some of the changes are because they've already happened. Some of them we have announcements, but we don't actually have the rules yet. And so we're still waiting on some of the finer details. What we do now know is that the test date for employees from the 3rd of August 2020 onwards has changed. It was originally 1 March, it is now 1 July. So for JobKeeper until very recently, when we were trying to figure out whether someone was an eligible employee for JobKeeper, we really had to look at certain factors and whether certain conditions were satisfied on the 1st of March 2020. So was the individual employed on that date? What was their age, their visa status? Had they been employed for 12 months up to that date if they were a casual employee? So 1 March 2020 was the crucial date in many respects for employees. Well, from the 3rd of August 2020 onwards, so not just for JobKeeper 2.0, but also for the tail end of JobKeeper version 1, we now have a new test date for employees, and that is 1 July 2020. Now, what that means is that if someone starts to be employed by an entity after 1 July, they're probably still not going to be eligible for JobKeeper with that entity. Now, there might be some exceptions to that. There's some very limited rules which might deal with businesses that are changing ownership, some situations where employees might have been kind of terminated and then they've been rehired after that date. So there might be some limited exceptions, but by and large, we're now looking at whether someone was employed on 1 July 2020 and whether they met all the relevant conditions at that date. Now, the good news is that for employees who already satisfied all of the conditions as at 1 March, they do not need to be retested as at 1 July. So basically what the new rules do is that they potentially bring in some additional people in as eligible employees. But people who were already qualified before, as long as they're still employed by the entity and nothing significant has changed, then they should generally still be eligible as well. Now, that new test date means that some people who were employed as casuals on that date will also need to have a look at whether they were employed on a regular and systematic basis for the 12 months leading up to 1 July. Now, one of the most common questions we've had over the last few weeks is, well, what happens when a business had casual employees? They have been employed for more than 12 months, but there was a period, particularly early on this year, where the business basically couldn't offer them any work. They weren't getting any shifts because the business was effectively in lockdown mode. Well, the ATO has released some updated guidance in this area, which suggests that the ATO is looking at taking a fairly flexible and pragmatic approach to that issue. There's some examples on the ATO website suggesting that just because someone wasn't offered much work between, say, March and June this year, that won't necessarily mean that they don't qualify for JobKeeper. Now, we still need to look at the circumstances. We need to double check that they satisfy all the other conditions. But just be aware of that just because business wasn't normal and someone wasn't able to work, say, normal hours during a 2 or 3 month period, for example, that won't necessarily keep them out of JobKeeper. So, by and large, that's pretty positive because we'll see some people moving into JobKeeper who were not previously eligible. Now, at this stage, there's still a bit of a question mark over some of the finer details on JobKeeper 2.0. We're hoping for some pretty significant developments on that over the coming week or so, and we'll just wait and see how that plays out. Just be careful that there's a very big difference between an announcement and actual rules. We're waiting on the actual rules for JobKeeper 2.0. Once they're released, we'll hopefully then have updated rules released from the ATO around things like alternative tests. But really, we're just waiting on the details so we can then determine who is and who is not eligible for JobKeeper beyond the 27th of September.
And now tax treatment of COVID-19 related assistance to business.
Now, one of the most common questions that we've been receiving basically since March was, what does a business do from a tax point of view when it's received some sort of assistance, financial assistance from a state government? Now, for quite a while now, we've had a pretty good handle on what happens to things like cash flow boost. Tax law says they are non-assessable, non-exempt income. We've had a pretty good handle on what to do with JobKeeper payments. We know that they're generally assessable unless we're dealing with a tax-exempt entity. But where there was a bit more of a question mark and where, again, we were getting lots of questions was what about state government assistance? So lots of state governments were providing grants to particularly small and medium businesses and other forms of financial assistance that were being offered throughout basically most of this year from March onwards. Well, the ATO has now released some quite specific guidance in that area, which, to be honest, seems pretty consistent with the ATO's views going back a number of years in this sort of an area. The ATO's view traditionally has been that if you are running a business and you receive some financial assistance from a government department or government body, then that will probably be accessible to you. It will normally be taxable. Now, that's sometimes a little bit different in cases where you receive some financial assistance to commence a new business or where you're receiving a payment basically to stop carrying on a business. Doesn't mean those payments aren't taxable, but they might be just taxed in a little bit differently. But in cases like this where someone is carrying on a continuing business and the payment is made to them to enable them to continue carrying on that business, it will generally be accessible. It will normally be taxable to that business entity. Now, from time to time, we do see the government decide that certain financial assistance payments offered by government bodies will be tax-free. That does not appear to have been the case here. Now, cash flow boost is the exception to that. That is tax-free to the entity receiving it. But aside from that, state government grants we would expect to be taxable. There don't appear to be any specific legislative changes made to make those things tax-free. So in most cases, you can probably assume that if a business has received some financial assistance in the form of a grant from a state government, it will probably be taxable. Now, the ATO has also provided some guidance on what do we do with things like land tax relief, payroll tax relief, electricity rebates, those sorts of things. Well, what the ATO is basically saying is rather than dealing with those things as income, we will instead deal with them as an adjustment to the deductions that are claimed. So if a business has received a refund of some payroll tax or a rebate, or its payroll tax liability or land tax liability has been reduced or waived for a period of time, then the ATO says basically don't treat that as income for tax purposes, just reduce the deductions that would otherwise be claimed for those things. And the ATO takes a similar view across the board, payroll tax relief, land tax relief, and things like electricity rebates as well. So government grants typically will include those in assessable income. Other forms of assistance in terms of rebates and refunds typically will deal with those as an adjustment to deductions.
And now across to the superannuation guarantee amnesty.
Now, I thought we just should give a final reminder that the Super Guarantee Amnesty is due to expire very shortly. 7th of September this year is the deadline, at the moment anyway, for the Super Guarantee Amnesty. Now, a number of bodies, professional associations, etc. have been really trying to push the government to provide an extension to that deadline. And it's important to note that this is not something the ATO has any power over. The ATO can't just decide to extend the deadline. It has to be something that comes from government. It has to be legislated. But at this stage, it doesn't seem like that's going to happen, although you just never know. But for the time being, that Super Guarantee Amnesty that was was introduced earlier in the year, announced some time ago, is due to expire very, very shortly. Now, the ATO has also provided a bit of a reminder about that looming deadline. And what the ATO is saying is that they appreciate that some businesses might be finding it a bit hard to basically make any shortfall payments under that Super Guarantee Amnesty. And what the ATO has said more recently is that where that's the case and you still want to take advantage of the amnesty, we'll make contact with the ATO because they're more likely to adopt a flexible approach to those payments and more likely to allow payment plans to be entered into. I just want to bring a bit of a warning around that though. When you qualify for the Super Guarantee Amnesty, there's a couple of benefits to that. There's reduced penalties, there's some bits and pieces that you would normally need to pay that basically get waived. One of the other main benefits of the amnesty was the ability to claim a deduction for super guarantee shortfall amounts that would normally not be deductible. You normally can't claim a deduction for super guarantee charge amounts. It's just a feature of the rules. It's one of the penalties that applies for paying super guarantee amounts late. Well, one of the benefits of the amnesty was the ability to claim a deduction for those things that you wouldn't normally get. But the catch is that you need to have actually paid that amount during the amnesty period. So the ATO may well give your client an extension of time to pay the shortfall amount, and that might be good. But if they're paying any of that amount after the end of the amnesty period, they basically won't be able to claim a deduction for that. So they'll pick up the other benefits, they'll be relieved from maybe additional penalties from the interest charge, but they'll lose the deduction where those amounts are paid after the end of the amnesty period. So before we jump in and go and seek payment plans from the ATO, really important just to be aware of the fact that by extending out the payment of those amounts, clients may well lose one of the benefits of the amnesty, being the ability to claim a deduction for that. So it's important we're just aware of the pros and cons of taking certain steps, like seeking those payment arrangements from the ATO. So amnesty, it's due to end really soon. We really don't have much time to get onto that. Hopefully, if you have clients who wanted to take an advantage of it, you're well down the path of gathering the information and getting it ready to go to the ATO if you haven't already done that. We'll keep an eye on things just to see if the government does decide to provide any extension, but at this stage, it doesn't look like it. 7 September is our deadline.
And that's the tax roundup for this month. Change is a constant right now, and if you and your practice need assistance to stay on top of change and you're not a member of Knowledge Hub, then give the team a call on 1800 800 232. We'd really love to show you how we're helping accounting firms across Australia. We'll look forward to speaking to you soon.